Hey everyone, let's have a great week. How's everyone doing today? Hope you had a great weekend. You're prepped for another wild week, capping it off with NFP. Oh, NFP was last Friday. Okay. Anyway, I'm looking at the gold here, guys, and I have a 2 drive working right now. And although I think there could be a lot lower prices, I do see potentially a counter trend trade setting up. Um, Maybe on one more test of a big round number, 1500, 1490. And then when you get to the goal longer term, you have this throwover line, which comes in around depending upon here, 485 or so. I'm expecting it to hold this and maybe even before it. So uh, I'm not doing anything here today, but I have a bias that I may try a counter trend trade down here. US dollar yen, it's pretty defined. We pulled back and held this pretty important line. So I guess you stay long yen over this line, but we start closing back underneath it. I think you'll have a failure. That may not happen until we get a high in the S&Ps, and the S&Ps have taken out the 78.6 level. Looks to me like new highs are coming here, maybe into next week. Next week's a big week with the Fed, mid-month, equinox coming up. So perhaps we have some euphoria, maybe some good news. Maybe it's Powell. But to me, it looks like we could get one more high. Just to keep in mind the big picture. I'm not sure if the daily will confirm it or not. I know the weekly most likely will not. I don't think it will. We'd have to go to 4,000 to negate this confirmed high here. And the monthly, it's just as um, glaring. So we'll see what happens here. To me, this breakout over 2840, if you're just, had no biases or anything, this was about 160, 70 point range. Breakout almost gives you 3,100. And the upper line's going to come in at this 30.55 level or so. So that's where I think we're going, and that keeps the megaphone formation still valid. Who knows? Maybe even a little bit of a overthrow up there. But I'll be watching it up there for potential shorts. I think it's premature here. Oil is trying to break out. Okay, here's this formation we've all been looking at. If I extend this line, we're still, really right there. So we'll see what happens with the oil here. My bias is if the S&Ps are going to break out, that we could get to about 61 or so in the oil market. And this is pretty important. This is why the S&Ps are going up. We got this high, which was, the weaponized yuan losing a little momentum. I don't think it's the end of this move in the yuan. We would have to negate the breakout here. And that was tested right here. And we're quite a distance away. To me, this looks like a 2-drive formation in the yuan, which implies there could be another push up in the coming days, weeks. I think that may be the catalyst. And looking at the yuan, I don't trade it. I use it as a gauge. But to me, it looks incomplete up here. Sometimes the third drive could happen in threes. Maybe this is 1, 2, 3 for the third wave. So we'll see. I still think over 720 is going to happen. I don't think the market's going to like it, although it held up pretty well with this happening here and got creamed when this happened. So it's really the trade war. If you want to know what's happening in the trade war, all you have to do is look at USD yuan. I want a hats off to Stelios, my sappy brother. We're still continuing lower in euro pound.
love you, man. Good morning.
Good morning, Estelle. And, we broke, now you could probably protect yourself. I don't think you want to see it closing back over this old support at 90, but it's 80 pips away. Talked about this moving average around 88, and we have different fib levels. So really, it's been a great trade. Every rally is fading, and these are a couple of potential objectives. Where I might differ a little bit with Stella is that I think this is not the end of this, but this is a correction before we get another move to the upside. But that's working good. And I think Andre had a pattern in that we talked about last week. I'll wrap it with Aussie Kiwi that shows it topping up here. And it looks like we may have had this little pop here. It looks like a decent short. And there's a lot of confluence right here at this 105 level. So, there could be 160 pips risking the highs about 40. So to me, this again might be a break to buy, but I think it's vulnerable. It would have been more bearish to me if it had taken out the stops and made new highs, but to me, it looks like it's rolling over, and Andre's very good. It's a part of my intelligence gathering. And, speaking about intelligence gathering, you can, really accomplish a lot with your intelligence gathering every day right here. Whoops, what happened? Oh my goodness, I wiped out everything. All right, so I was going to go to the, I hope I'm still online, am I? Can everyone hear me?
Yes, you are. Yes, you are.
Oh, okay. All right. Oh, God, Monday. Oh, all right. Anyway, I wanted to show you guys for intelligence gathering, you hardly have to go anywhere else but here because of, the combination of humility and talent that we have here. So you have all these instruments. Have a look around. I have one question. What can we do to stop Steve from talking right before my interviews so I could start on time?
You found a short-term solution with my internet last week.
Oh, yeah.
Now the technicians have fixed that.
Yeah, okay. Anyway, what a great website. All right, so you have everything here, and you have Grega, you have Andre, you have Blake, you have Steve, you have Stelios. I don't know why you'd have to go anywhere else. Plus all the great guests that bring lots of market pearls every day here in Face. So, you have any
and don't
questions?
forget Amanda in the chat room.
Oh yeah, yeah. Amanda in the chat rooms. Yeah, Paulie and Blake were right on the dollar turn, spot on last week. So I don't know. I mean, I still look around, but you really don't have to. You get enough varied views and varied methodologies right here to just hang out with us and in the chat room. Amanda's stuff is great. Joe did a webinar Saturday. Joe hangs out in there and Steve's in there. And it's my belief that since I've been here about 2.5 years, I'm seeing the markets better than I ever have in my 90 years in the business. So if it can help me who's been around for a while, it feels like 90 this morning. So if it can help me who's been around for a while, just think about what it could do if you're just getting started, or maybe it's your second or third year and you're starting to do okay and you're breaking even, but you really haven't made a breakthrough yet. Surround yourself with traders better than you. That's what I did. And with that being said, here's one of them. Hi, Blake. How are you today, buddy? Are you footballed out?
Oh my gosh. What did you get a chance to watch and I hate talking football here because I know we have so many non American, a lot of Europeans and Asians, and they don't give a rat's butt about football. But I'll tell you what, did you watch the end of the Cardinals game?
No.
Oh, It's an epic comeback. I mean, they ended up, coming back, and
So
it was a
that
tie.
draft pick and the new coach, even though they look kind of stinky in preseason, they played well, huh?
Yeah.
Cool.
It was a great game as a Cardinals fan. Just for those people that don't know, and especially if you're not an American, and when but you guys can all feel the pain when you have a home team. You're like, my home team is the Arizona Cardinals, and they're just notoriously a horrible football team, American football team. And we've had so many false hopes and dreams, and
Carson Palmer.
Yeah, Carson Palmer, at least he was. I mean, he was good. He's too old, but and we had a hopeful quarterback last season. Then we got the first round quarterback this season, and it looked like just another failed start, but they came roaring back last night. It was so exciting. And as a fan of, since they've been here for the last almost 30 years,
we didn't get that game. We had to watch the Patriots slaughter the Steelers. So
watch that game too. That was great. But anyway, it was.
But I could relate. Blake, I've been a Bears fan all my life, and here's the Bears. Great defense, no offense. Great defense, no offense.
Right.
No, they haven't had a quarterback. McMahon was the best, and he wasn't super. And this is my whole lifetime, and you know how old I am. So
I mean,
the Bears
you are dinosaurs.
Really frustrating that the Bears could never have a quarterback.
Yeah, I know. But anyway,
anyway.
I should probably not. We should probably not talk football because it's for most people's sake. But I'll tell you, I just want to say that it was fun. It was fun last night. It was great.
So what trades were you putting on when you were watching them?
Nothing. Nothing at all. Actually, I did not trade at all last night. I started chipping away. Selling a little bit of dollar Swiss this morning, and it's just because we're up against triangle resistance. I know this trend line's pretty much it, and so I started selling a little bit here this morning when we were above 99 cents, and it's not a huge position, but we have the ECB this week, and just so Stelio said, didn't the Arizona Cardinals have Cuba Gooding Jr.? Yes, kind of. By the way, Stelios, that is by far, if you guys are movie buffs, Jerry Maguire, just an awesome
one of my favorite movies. Yeah,
it is so great. I can't. My boys are pretty much at the age where they can watch that movie.
That could be our slogan. Let us help. What is it? Help
me help you.
That's it. Help me help you.
Help me help you. If you guys haven't seen that movie, it's a great movie. Jerry Maguire. It's one of Tom Cruise's best. I wouldn't say at his best there. But anyway, okay, going back to the FX market. We're waiting for the ECB this week, and I really want to be looking to buy the euro on dips. As I played the euro to the long side, I've got out, and I'm looking to buy it again on dips. And let me tell you the reason why. Because everybody is expecting the ECB to roll out another QE program. Everybody's extremely dovish and extremely bearish to the euro. I personally don't think they're going to be able to live up to the market's expectations. I'm going to just say it outright. I don't believe they will.
Blake, they're also pricing in a reduction to minus 0.5 or minus 0.6 from 0.4 for the deposit facility.
And I really don't think that the market they're going to live up to market's expectations. I think the euro is going to be a sell the rumor, buy the news. situation. So what I'm looking for this week, hopefully today, maybe tomorrow, is I hope the euro dips below 110 because I want to be on the long side of the euro below 110. And frankly, I don't know if we're going to get the opportunity, but I do think that this is the week that you're going to get and that's how I'm playing it. So I'm just letting you guys know I'm looking to buy the euro. If we could do, I guess I'll draw it out for you. If we can see a dip like this, I'm looking to play it to the long side down here. So that's how I'm looking to play it. And we'll see if we can get a move down there and the euro down below 110. I'm already kind of, like I said, nibbling my way into short dollar in the dollar Swiss, because I think the dollar Swiss is a good risk reward to be short up here. The only thing that really could, in my opinion, that could stand in the way of the Swissy not rolling over right now is equities. Equities look strong. I mean, look at the S&P. We're continuing to rally, towards the 3,000 mark, and we could go beyond that too. So that's the risk I see with the dollar Swiss being on the short side. But like I said, to me, it's a risk reward that I'm willing to take. We might get back up to parity not today. I mean, I'm talking here in the next couple of days. But I'm willing to take a little short here, and it's nothing for me. It's nothing that I'm not in a huge position. I'm not gonna and I don't feel like I need to be aggressively short the dollar Swiss here. However, if and I'm kind of speaking right now about, let me grab a pen, draw, here we go. So what I'm thinking here is if I can get short, this is great up here, and if it can roll over, that's fine, and then what I'll do is just keep my stops really tight, maybe bring them to break even. And if for some reason going into Wednesday, Thursday, it fails and it get really lucky and dollar Swiss breaks below 97 cents, then this is a home run type of trade, because this trend line here is a multi-year trend line. Do I think that's going to all transpire like that? No, I really don't. But then again, I have an opportunity to take a short with very good risk reward right here, and so why won't I take it? It's for me, and like I said, it's not huge. I don't want to, and I'm not overexposing myself, and if it doesn't work out, it doesn't work out. But because there's not a lot to do right now. The pound spiked up to test the previous spike low down here at 123.75. It's huge. This is huge resistance, and we're knocking our head up against it. Now, the cable, dipped a little bit, and I do have a small position in the pound, but it's via futures. So it's, I always mismanage my stops when I'm trading futures. I'm more good at spot trading as far as being accurate with my stops and limits. Futures, I always flub up the numbers a little bit. I just, mistype, and I'm horrible. I'm just horrible at doing it. Fortunately, it worked in my favor. I had my stops a little deeper than I thought I was going to, and but the pound is, pushing up against good resistance. Now, Stelios, do you know why the cable spiked up this morning?
Hello, yes. Good morning. A couple of reasons. First of all, we did have some decent, let's say, economic data. So GDP was expected at minus 0.1. It came in at flat. Manufacturing production, industrial production, trade balance, all better than expected. Nothing stellar, but they were all green. So that was one of the reasons. But we also had some comments from the Bank of England and Boris Johnson, who now said that a no-deal Brexit would be a failure. That these are his words, and he vowed to reach a deal with the EU by October. So this is a slight change of tack by Boris Johnson. We still have to see what happens, because as of I think midnight today, the UK Parliament is closed until October 14th, if I'm not mistaken. So they're going to have some time off. I wonder if they're getting paid for this time. And the other interesting thing, which again probably gave the pound a little bit of a lift, was the Bank of England, who said that they're unlikely to be able to cut rates just like in 2008, 2009. And they've done some analysis which effectively rules out negative rates. They said that, you know, the benefits, well, there is no benefit with negative rates. So, you know, it's the market is pricing, short selling futures are pricing a good chance of one more cut within the next year or two, but basically it's quite flat. And the Bank of England have told us now that, look, you know, rates are not going to negative for sure. And I think they're going to be less inclined to cut from where we are now, which is pretty close to zero anyway. So I think the combination of these three things gave sterling a little boost. Let's see what happens during the next few weeks when the parliament is closed. We might have a break from all this Brexit crap. I want to say crap. Yeah, I can say crap.
You can say crap.
Yeah, you can. It's a nightmare if you ask me. I mean, I really want to get this drama over. Stella, I wanted to ask you, I don't know if you've heard the rumors, because...
No.
Not the rumors, actually. I mean, that Boris Johnson might ignore the new bill.
That takes no deal Brexit off the table. Can he ignore it? I don't know how the mechanics work, so I really don't know.
Let me read you something interesting. I found it interesting, so I actually took a screenshot of that. Because it does sound interesting, and it does sound legally logical. So what I've been reading is the following. Can he ignore it, blah, blah, blah? Can he actually do this? Well, yes, he most certainly can. And that is why the government suddenly dropped their opposition to it in the House of Lords and let it go through virtually unopposed. Here's the legal position which gives him that right. In December 2016, Parliament voted overwhelmingly to trigger Article 50 and set in motion the process of leaving. This is a 2-year process, which means that the member state will leave after 2 years, with or without a deal, providing that no extension has been asked for and agreed. The Article 50 process has been formally triggered, blah, blah, blah. Well, as we know, 2 extensions have been subsequently given. Article 50 rules, which are subject to EU law, state that the decision on whether or not to request any extension rests solely with the executive, i.e. the Prime Minister in our case. Our own Parliament are rushing through a new act compelling Boris to ask for another extension, but as we're still a full member of the EU, then the Article 50 rules legally supersede any acts or laws passed unilaterally in the UK Parliament which seek to amend this. As they did not also seek to rescind the Article 50, which they now cannot do without the express permission of the other member states. The current act, which is due to become law on Monday, is overridden by the EU Article 50 law and is therefore effectively worthless. And so the Prime Minister can just ignore it, as the EU law takes precedence in this matter, and therefore the decision of whether or not to ask for any further extension is his and his alone, and no act of the British Parliament can change or amend that.
Okay, so it gets even more complicated then. Okay, well.
From my legal knowledge on big matters, on what it says, that EU law supersedes local law, I mean, you know, the country's law, that is true. I mean, the courts have decided multiple times on that, and that is the case indeed.
Okay. Okay.
I just fell asleep, Steve. So what? I mean, I literally was sitting at my desk and I just fell asleep on myself. Thanks. Thanks.
That was a beautiful oratory by.
Yes, thanks.
Yeah, but that is quite important, because as you understand, what it says is that, you know, if he wants to do it, he has legal backing to do it. So, you know, that adds a layer of complexity indeed.
Thanks.
Again.
So
anyway, so where do you buy and sell cable?
I think that both Blake and I have been adamant about that. 123.80, which we're currently about to attack, is key. I really do think that, you know, above that we can really squeeze.
There you go.
Yeah, and
That's all you had to say this morning.
Yeah, and minus all that, I say if you really want to be long here, like, this is where you're at a risk reward type of situation where you have to really look past the
D'Arc is saying to ignore Blake. That was very useful, Steve. So, all right.
Well,
What
I'm saying is just, like your risk now is below 120. And if you really want to be long here, it's like, is it worth a punt? Are you willing to, take a stab at it and say, hey, I'm willing to risk 300 pips from here and, looking for a much bigger move higher. And I think that we're out of that channel. And even if you don't want to risk that, you can say, well, I don't want to risk below, 120, 150. And, I think that's still decent risk reward for longs at current levels. I don't know. But anyway, Steve, it looks like your internet's working again.
Yeah, it does. Yes, it does.
That's good. That's good. Okay. Well, good. Well, it's nice to have you back.
Nice to be back.
So one of the, and I'm just gonna leave you guys with this, and then I'm gonna pass it over to Steve. One of the other things that I'm looking at is I'm looking at the U.S. dollar Mexican peso. I really want to be long the dollar Mex. I had gotten out of all my longs when we were up here at 20. All right. And I was hoping we'd break out. And for all intents and purposes, this cup and handle actually played out. I mean, if you look at it, and just let me grab my drawing tool really quick. This is here's your cup, right? Well, here's your handle, right? So the distance between here and here is about equal to there and there. So I'm for all intents and purposes, that all whoops, clear. There we go. That all played out. Now the failed breakout here should lead us down to, I'm thinking the 200-day moving average, but maybe even all the way down to 1920-ish. I am looking to buy it on dips. So I'm hoping that we, get a little bit more of a rally in equities, and the dollar Mex can actually sell off a little bit further. But I am looking to play this long, and then for an eventual break above 20. So I am looking to buy dips here. I'm just, I haven't started stepping into it yet. But it is something that I think if I can play it on the long side down here, I'm going to try to, hopefully sometime this week. So that's like the other thing that's really on my radar this week. I had a really great week of trading last week, and it's, but right at this moment in time, it's, I think you got to finesse your way around the markets. There's not any really good trends that have established themselves between now and, probably between now and Wednesday, Thursday. One last thing about the ECB: if the ECB cannot live up to the expectations of what the market is looking for, that could be a catalyst that actually puts a top in stocks sometime this week. Because if on Thursday, if the ECB just doesn't give the market what it's looking for, we could see stocks come under pressure, which therefore, I look at the euro as being a long, and I've explained that, from about 20 minutes ago. And I look at the dollar Mex as being a buy on dips. That means I'm going to be looking at the euro Mexican peso as a possible long down here, hopefully back at support somewhere down at this level. So anyway, just a couple things that I'm thinking of, but I'm going to pass it over to you guys. And remember, we have a very special offering. It goes live on the 16th. Is that correct, Steve?
Monday, the upcoming Monday 16th.
Yeah. So let me just, without giving you guys all the nitty gritty about what the deal and what the offer is, it is going to be a pretty cool offer. So for those of you guys that are looking at ForexAnalytix and you want to try it out, this is a good week to do it, because if you try us out, you're going to be able to use ForexAnalytix right now for the next week. When we enact the offer, you guys can take the offer, because when we put in the offer, the special offer that we do only a couple of times a year, you can't have a trial. So you have to just, take the offer because it's at such a steep discount that we don't offer a trial. Okay. So try ForexAnalytix right now. That would be my recommendation.
Blake, before you leave, there's one question that I would like your answer to. It's came from someone anonymous in our chat room. It's how do you calm your nerves when your positions are in the red? How do you prevent anxiety from?
It's easy.
Go ahead.
That's a great question. Yeah, I just drink a lot. No, no.
I heard you do.
I do actually. My liver says I do. No, really is by having a stop in place, because whenever you have a stop in place, it mentally for me, I know what my risk is at that point. So like, let's say, just give you an example with the dollar Swift. So I shorted it this morning, up here above 99. It was like 99.08 when I sold some.
Yeah.
My stop is at 99.30. It's at 99.30 right now. So my stop is already in place, and I know that if I get stopped out, my risk is X, right?
Yeah.
It's already there. It's already there. So for me, I know my risk is already there. I know that that if I get stopped out, it's going to cost me X. Therefore, it's in my head already that the risk is there, and I've kind of already written it off. It's kind of like
okay, there you go.
Yeah, it's already written off. Now, as long as you have a stop in place and you can calculate it in dollar terms and go, okay, hey, I'm risking 10 grand here, or I'm risking $200, or it's 30 pips, whatever it is, as you equate it in your mind. As long as you already have it, like, okay, it's there. If it doesn't work out, it doesn't work out. Oh, I'm going to lose 30 pips. That's not the end of the world. It's not going to, it's not going to crater my trading. It's not going to, it's not going to, bankrupt my account. As long as you can face that, then it's fine. It's because you're going to take losses.
Yeah.
It's natural.
So part of the problem would be if someone's still nervous after putting their stop in, that it's possible that they're trading with something that is not risk capital.
Yeah,
so
yeah.
They're nervous. They can't afford to lose. Period.
Or their positioning is too big.
Yeah. Okay.
Yeah. Which which is a problem for a lot of people, especially in the FX market, because so many currency traders try to
1,001 leverage.
Yeah. You're leveraging up, and you go, well, hey, I'm gonna take a shot at the dollar Swiss on the short side here, and I'm trading a huge amount, and if I get stopped out above here, I'm gonna lose half of my account. Well, then you shouldn't be taking positions like that. You shouldn't.
Thank you, buddy.
All right, my pleasure. Hey guys, have a great Monday, and thank you all for being here. And Steve, I'll give it to you.
Okay, I'm grabbing
guys,
have a nice day.
Yeah, have a good day, Blake. And we have Saeed Ziman, Trader 1SZ, with us today. So
great.
It's going to be a good interview.
All right. Enjoy, guys.
Thank you, Blake.
Thanks.
Blake.
Bye-bye, mate.
Blake. Scoliosis.
Hey.
Sounds like a disease.
So-
Scoliosis.
It's a case of scoliosis. By the way, Mnuchin just said interest rates are high relative to the rest of the world.
Who said that? Trump?
Mnuchin.
Oh, okay. Yeah.
Yeah, an
Okay.
extension of Trump in essence in
right.
those issues. Yeah.
Mouthpiece. Yeah.
Good thing he didn't say they're high. At least he said high, in comparison to the rest of the world.
Yeah.
I don't have that much more to say, actually. We had the Japanese GDP came in line. Nothing from Donald Trump yet. Maybe he's not awake yet. No, he must be awake.
He
But,
doesn't sleep.
I don't have that much to say. I actually want to say, our friend Jane said it's not crap if you're British. I call the whole situation crap. Yeah, I'm not saying it's not important, but it's just frustrating. I can only imagine how frustrating it is.
Actually, I would find it even more frustrating if I was British. I mean,
yeah, of course.
I find it frustrating as an outsider. I mean, get it over with. They should have, for the best of the country, found a solution, faster than that, because, by postponing and trying to, push the issue forward, nothing good comes out of that. That's the only certain.
It's more frustrating for Stelios because he has more of a British accent than you do.
Hey, I'm half British, man. I lived there for 17 years. So
See what I mean?
I'm half Brit.
Steve? And now let Steve, you say something.
Yeah.
Okay. All right.
So yeah, Steve, I don't have that much more to say, I'm afraid. So you can take it away.
Okay, mate. Okay, cool. So yeah, Eurobound, by the way, is still working on nicely. And keep in mind that if we do break above 123.80 in the pound against the dollar, I think we're going to see a lot more downside from this pair. As you see, if we go to the daily chart, actually.
So a few weeks ago, you were looking for about 88.5.
Yeah, 88.5.
So now where?
That's a good question. That's why I wanted us to visit this, because you can see here why I was looking for 88.5. It's because 88.5 would put us in a place to retest the broken. This is actually what we drew back then here in red. So, you know, it would put us in a place to retest the broken descending channel's resistance as support. So not only we've done that, but we seem to be attempting to break below it. Today, so far, we're seeing this bearish engulfing candlestick, which if it does close like that, that is definitely a bearish signal. And as you see, we're also threatening with a lower low after quite a long period of time. I mean, we haven't seen a lower low since March.
How about 87.5, which was resistance forever, and once it finally broke through, we got acceleration?
Yeah, that is the next area. 88.5. It's not only
87.5.
88.5. I'll tell you, 88.5 is an area to monitor for two reasons. First of all, it's horizontal. It has been horizontal support resistance area. Second of all, as you see just below it, the 200 daily moving average is actually converging. It's very, very close to that. It's entering that zone. So it is a confluence of supports at 88.5. So that is the next area of interest. You know, below this 89.5 that we're currently breaking below. But, you know, we've now broken the ascending channel that was leading us higher since April, since the beginning of April. We now have seen that the market is also about to breach the previous channel's support resistance, which is acting as support. And as I said, after that is 88.5. So yeah, it remains under pressure. And if, let's revisit it here, if the cable breaks, where is it? There it is. Sorry, my mistake. Here, yeah. So cable is currently testing confluence of resistances. Why is it a confluence? You can see here why. Because at the same time, oh, I hate Magic Mouse and I hate working on a MacBook. So you can see here why. It is a horizontal support resistance area. It is the previous low that we had, that spike low. We tested it here as support. Initially, it worked until we actually breached below it. So now we're retesting this horizontal support resistance area as resistance. At the same time, we have this expanding triangle here. That is, you know, we have resistance from that expanding triangle as well in this area. So, you know, a break above there, I'm pretty sure that the cable is going to squeeze higher. Now, if that happens, I'm expecting that that should be enough for the pound to overperform the euro, you know, at least, you know, in the short term. So I'm expecting that the break above, and especially daily close above 123.70, 123.80 is going to lead to at least a short-term overperformance, which means that it's going to lead to at least a short-term sell-off, further sell-off in the euro pound. So, you know, that's what I'm looking for here. Now, if you also want to have a look at what's happening with another very liquid pound pair, which is the guppy, the pound yen, you can see here on the daily chart, and I'm going to take you back to the 4-hour chart, that we had a double bottom. Now, once we broke above this previous high at 130.5, we actually triggered that double bottom. Now, if you look at it, on the 4-hour chart, you're going to see that not only we triggered it, but as it's frequently happening in this case, we got a break higher, we came back, we retested that breakout area as support this time, and now we're pushing the new highs. So measuring the range and extending it, you can very simply do it like this. That would give us a target roughly, just above 134.5. So, just by taking a measured target from the range, from the double bottom, we still have more upside to go. Actually, more than 200 pips left to complete, this double bottom formation. So the gappy as well shows, that potentially there is a lot more upside coming. Now, the situation is a little bit different if you look at other crosses, like the pound Aussie and the pound Kiwi, and that is mostly due, and that is one of the things I wanted us to focus today, what has been happening with the Aussie and the Kiwi. Because if you remember, we were quite clear that 68.30 was a key support resistance area for the Aussie. We broke above it, and as you see, Aussie is working on its 5th consecutive up day today. It all began by seeing this beautiful key reversal there, an outside white candle. We got that last week, at the beginning of last week. And since then, what was it, Tuesday? It was actually, since then, we've been rallying. We've now broken above 68.30. So, there is likely more upside for the Aussie against the US dollar. And if you look at the Kiwi, if I remember right, reversed one day earlier. We had an inside day initially, and it's also been pushing higher. And guess what? This one today has also been trading above 64.25, which was the equivalent support resistance area. So Aussie and Kiwi finally putting on some, rebound. To be fair, you don't see something much different if you look at the Aussie against the yen. Just look at the Aussie against the yen. Broke above this descending channel. Once it did, it started accelerating higher. And most importantly, the Kiwi against the yen. Actually, this is better. I like to ignore this little wick because then it looks like a beautiful descending wedge. And sometimes you can ignore intraday candlestick wicks if that gives you a more solid formation. And in this case, I think this descending wedge worked out beautifully. Now, pay a little bit attention here, because the Kiwi yen is now approaching multiple confluence of resistances. It's the 38.2 from the last move lower. It is a horizontal support resistance area. If you zoom out, it's a super critical horizontal support area, support resistance area, dates back years, literally years. And that is also the beginning of this wedge. And keep in mind that, theory tells us that, once you break a wedge descending or ascending, the target is a full retracement of the wedge's formation. So, a full retracement to the beginning of the formation, which in this case, that is also more or less in the same area, roughly 69.10, 69.20. So, I wouldn't be surprised if I see a reaction from here. Now, of course, if we do not get rejected from this area, but we actually get past it, then I would expect, a very decent continuation to the upside. So we are facing strong resistance here, but keep in mind, because that's a double-edged sword. On one hand, it gives you, a beautiful risk reward to be short, even for a short-term reaction. But on the other hand, if you actually penetrate through this resistance, that shows you that there is a lot more strength in the market than you expected, in which case you should assume that there's going to be a decent more upside coming. So all of them are showing that the Aussie and the Kiwi during the past week have been overperforming what we've seen the euro, mostly the euro, but somewhat the pound as well do. And that's why if we go to the crosses, now let's have a look at the euro, for example. And here is where it starts becoming very, very interesting. And that is why I'm going to focus first on the euro Aussie, because the euro Aussie has been rejected once again from this ascending wedges resistance. And guess where it currently is at? It is at these wedges support, 200 daily moving average, a few pips lower as well, currently passing from 160.40. Bottom line, it's actually threatening with a very, very big bearish breakdown. Okay, so Euro Aussie at a very critical juncture here, as it was at a critical juncture there, and we got rejected. We are at a critical juncture here. So, two options. Risk reward is great for a rebound. So, you like it, the upside, you buy it. The technical situation gives you the ability to have a rather tight, not very, but a rather tight risk reward ratio. Keep in mind that, those crosses can be quite volatile. So I'm really not advocating that you should be using like a 10 or 20 or 30 pip stop loss. So, adjust your position size accordingly. So you either buy it and expect some kind of a reaction, perhaps for a move towards 163.40 once again, horizontal support resistance area. We've seen highs created here and there and here, and consolidation there, and then it acted as support. So it might act again as resistance if we rebound. But on the other hand, if we do break down from this formation, and keep in mind, these type of formations are clearly not impulsive. So, eventually, I would expect that, there is a decent chance for a breakdown from this formation. And why not? I mean, we're retesting it once again. Of course, it didn't happen the previous time. It didn't happen the time before that. But at some point it's going to happen. And when it does, we're going to see a big move unfolding from there. So, keep a close eye to that, because as I said, it's currently on support. And here is the Euro Kiwi. The Euro Kiwi has actually triggered on Friday a double top formation. You can see it here. If we go to a 4-hour chart, you can see it more clearly. Let me find it. There we go, Euro Kiwi. So there you go. Double top formation here, triggered once we broke below 172. As you see, earlier today, we rebounded to retest 172 as resistance. We got rejected, and we seem to be consolidating. This looks more like a bearish consolidation to me. So bottom line, I would expect that a continuation lower towards the next objective, which is below 170, is quite likely. So Euro Kiwi is looking quite bearish as well here. Now, if we want to have a look at the equivalent pound crosses, obviously the pound has been performing better, so they don't look as bearish. But keep in mind that the pound Aussie, for example, it was rebounding within an ascending channel. As you see, found support multiple times. Even today, once again, tested this trend line support. If it eventually breaks down from this channel, I expect a continuation lower. And pound Kiwi, as you see, it's been toying around with a breakdown from this triangle, from this ascending channel as well. And it seems quite likely that it's going to be doing so. Horizontal consolidation for the time being. So I would expect that an eventual continuation lower here as well is likely. As I said, we've seen Aussie and Kiwi that have started overperforming euro and pound, and it might continue for a few more days, and that should be enough to see another decent move for those pairs. Now let me have a look at your questions. German rules creation of shadow budget to increase public investments beyond restrictions of national debt rules. Sources very bullish the euro. Interesting, from Reuters. Yeah, it can be bullish the euro, at least in the short to medium term. It can be now very long term, perhaps not. As we've seen, a lot of Keynesianism is going through the minds and planning of institutions, and as it seems, it's going to be one of the themes of the next recession. A lot of Keynesianist solutions. Now, how that's going to work in the long term, I have a very bad feeling about it. But yes, we might see quite a lot of enthusiasm to begin with. DXY crapping, euro bouncing. Yeah, let's have a look at the DXY, because DXY opened higher today. But indeed, I have to say that at least in the short to medium term, I'm quite negative on the DXY. First of all, because I like not only the way the DXY got rejected last week from this multiple confluence of resistances. I actually thought it was very important when it was happening, so I wrote about it in the chat room the day that we were actually reversing before we even closed the day. But I also like the follow through. So yeah, we do remain in an ascending channel here. But I'm not very fond of what the DXY has been doing here. I mean, as I was showing you the Euro Aussie and the way it was rebounding, it's even worse for the DXY. I mean, we've seen a slow drift higher, but this choppy overlapping price action, momentum that has literally almost completely stalled, in combination with this type of a rejection, makes me think that the DXY should at least come down to retest once again this channel support, if not actually start producing something much more significant than that. So I have to say that I'm of the same opinion as Blake is. I see a very decent chance for a rebound from the euro, because that would obviously lead to the DXY moving a lot lower. We know that huge part of the DXY is euro, like 58%, and some of the rest of the currencies are also very highly correlated with the euro. You can see it here consolidating. This seems to me like a bullish consolidation before at least one more leg higher. Of course, if you want to see a real move unfolding and probably the DXY taking out channel support, you really need to see the euro producing a higher high. That would happen with a move above 112.50, which if it takes a little bit of a time, that is also going to be, besides the previous high, that's also going to be confluencing with this descending trend line resistance. So I think that the move towards 112.50 is going to be quite easy. So I think there is a very decent chance that we're going to see something like that happening. Now the hard part is going to be going above that. But if we do, then I would expect that market participants would be selling the dollar against multiple currencies, and I do expect that we're going to see a very decent move lower from the dollar. Even if that proves to be corrective, it should take several weeks to unfold. Keep in mind that the dollar has been, in essence, in a very slow uptrend, uninterrupted uptrend for a long period of time. So even weeks of a corrective move lower would absolutely make sense. By the way, I remind you, we were seeing those last week. Currency pairs like the USD SEK have already been making a move as well. Keep in mind, USD SEK is leading in this case. The Euro USD, don't forget that they're very highly inversely correlated. So, if you overlay SEK USD over Euro USD, you'll see that, more or less they're doing the same stuff, but, USD SEK has been leading Euro in this turn lower. In the case of the Euro, turn higher. It broke above an ascending wedge. You can see it here because we've drawn it and shown it on showed it on a 4-hour chart. But in this case, you can very clearly see this ascending wedge and how we've reversed after a false break higher intraday, and how we've even now taken out this significant horizontal support resistance area from 968. So I do think that the USD SEK is leading the Euro, and I do think that the Euro can continue higher as the USD SEK is moving lower towards likely this ascending wedge support once again. So I do think there's likely more upside for the SEK, for the Euro, etc. You name it. So more downside for the dollar before we actually have to face a bigger juncture having to do with what the market is going to do, and then we take it one step at a time. Now, I know that everybody keeps asking about what's happening with the metals. We've seen quite a sharp move lower, especially in silver. Not that the move in gold has been insignificant. I mean, very beautiful evening star formation right on resistance. I still have, and I increased a little bit my size, as I wrote in the chat room, of my gold short. I began with 1/4 of a position. I added a little bit when we were breaking another quarter, actually, when we were breaking below this area there, because we triggered the double top. So now I have half of a position here short in gold. I don't have a position in silver because I started out in silver with 1/4 of a position as well. But that got knocked out of the market because don't forget that for a few days, silver kept pushing higher while gold was diverging by not posting higher highs. And that is probably what has led to this huge reversal in silver. Well, I know it's very intimidating to see, such a big reversal. I mean, we had this parabolic last part of the move higher, and then we got this rejection and this huge move lower. I mean, within 2 days, we went from 1960 at the lows of Friday, we were below $18. That's a huge move for 1.5 days that it took to happen, unquestionably. Now, the question here is this the beginning of something bigger lower, or is it like a sharp corrective move lower? In my opinion, it's the latter. It is a sharp but corrective move lower. Now, the second question here is, okay, is this sharp corrective move lower over and done? Or, we've seen just part of it unfold. My assumption is the latter once again. So I find it quite hard to believe that the market can produce something like this from there. Just going to new highs straightforward from here. I find it quite unlikely. So I would expect somewhat of a more complex move lower. Important areas of support are at 1770, below that at 1720 something, and at 1670. But as long as we remain above this 1670 area, I think that the general outlook should be bullish. So I will be remaining patient since I don't have any more a short position. I'm not looking to establish one in silver. I'm going to keep on building on my gold one since that's how it happened. And for both those metals, I'm going to be looking for opportunities later on to be buying them because the general trend remains higher for multiple reasons, including probably the most important factor that drives those metals, at least in the long run, which is fundamental reasons and most importantly monetary policy, because don't forget that both gold and silver are monetary metals. So if you've lost the initial reversal here in silver, of course you can attempt shorting the first decent rebound, and I have to admit that 18.5 looks like a decent area if you're looking to, make something being short. So yeah, you can attempt to short 18.5, but keep in mind that the general direction, in my opinion, once we've produced these, big breakouts, remains to the upside. And, that is something you shouldn't ignore, because it's likely that you're going to find yourself in a lot of pain. Now, the extreme sentiment and the extreme positioning that we had in gold and silver are also a testament that, as I said, this corrective move lower, probably will last more than 2 days that we've seen. So, do look to buy them, but I think it's too early. Coach?
Yes, buddy.
Anything else?
No, nice coverage.
Okay, thank you. I didn't have time to go through everything, but that's why we're here. That's why we're in the chat room, and we'll be back tomorrow. So enjoy the interview.
Thank you, Steve.
And, I'll talk to you tomorrow again.
Okay, buddy. I'll talk to you later.
Yeah, actually, we'll talk for the meeting today.
Okay. All right. So, Saeed, welcome back to FACE. I'm going to make you panelist, and I'm going to unmute you so we could hear you.
Hello.
There you go. You're unmuted, partner.
Okay, can you hear me?
I can hear you, and my Trading Warrior brother, if you just look for a green box on the drop-down menu, it says share. Then you can click it, share your screen.
Okay, 1 second.
I know this is, have you ever used Zoom before?
No, it's my
Okay.
first time using Zoom.
Okay.
So
it's a little green box. I think you're doing it now. Okay, beautiful, Saeed. Welcome back, buddy. How have you been?
not been too bad. How are you?
Good, man. So isn't it great to have the summer over and the volume coming back?
It is. It's
All
not been
the-
easy. It's not been easy, but
Yeah, a lot of chops. So here we are in the fall trading season, and looks like you want to start off with the DAX. So
actually, no, I was going to start off with the dollar yen. I was just trying to.
oh, okay.
Yeah.
All right, beautiful. Okay.
So should I just get cracking?
Yeah. Go ahead.
Okay, so coming into the new week, there's a few trades that I have my eye. One's dollar yen, and one's euro USD. Got stopped out on my euro USD. I think my stops are a bit too tight. I'll get back into that, but let's start with the dollar yen. So dollar yen. So with dollar yen, I'm going to start with the quarterly, as we do.
Okay.
So I'm looking at this quarterly chart, right? So I'm looking at, the range lows and range highs. And when you drop, that was the initial low. We came into it there. We came into it again, but we're pushing back up. So it's last month, I believe, the quarter, and we are above previous quarterly low. So is that enough to go by? Well, as soon as it does something like that, my eye switches right to the open then. Okay, so that's just to get a bigger picture. As long as we stay above previous quarterly low, I think we push higher. Now, looking at the dollar yen now on the lower time frame to get a clearer picture, I'll start with the monthly. Similar thing, okay, we came down to key support, looking for the push up. Now, whether it has massive follow through or not, I'm looking for more short-term targets. Looking at the weekly, we've been in a range, about 3, 4, 5 weeks consolidation, and we're starting to break above this low here. Last week was the first week we had a close above. That puts me on bullish alert. Daily, okay, because we've been in a range, okay, this is one of the pairs
that breakout at 106.80.
Yep.
If we stay above it, you have to be long. Is that the way you're viewing? Okay.
Yep. So because we've been in consolidation, I'm looking for expansion now. So out of most of the pairs I'm looking at, I'm reckoning this is one of the pairs that should start expanding to the upside. So let's break this down further, and it's just basic SR really: support, resistance, breakout is holding.
Right.
Looking for 108.20. Simple as that. As for my risk, I've got a stop loss here below this low, because if it's going to break this low again, this SR level, most likely we're going to head lower. But I'm watching the 80 level now with the dollar yen. I mean, you mark at 106.80, 107.80. The 80 level just acts as a key pivot. So I actually closed my longs, and then I just got back in about 10, 15 minutes ago with my risk below here. I'm just looking for the 108.20. So yeah, I think if we can clear this high here, I think we should be on for 108.20.
Okay, and why 108.20 for a target?
Well, it's the open. 108.18 is the quarterly open. I
Okay,
believe it'll
got
probably
it.
go
Where
higher.
is it?
And also, if you look at this, right, I'm looking at my range from that high to this low.
Yeah.
Mid-range is capping the market, so naturally you're going to get some sort of reaction. But the way it's holding above this key level here, I think as soon as you can clear it, that'll confirm it. I can add more above here and just look for that target. Maybe trail some higher, but we'll see. But 108.20 looks like a high probability target to me.
All right, let me ask you something. Do you watch correlation, Saeed, or is it strictly every chart is its own unique character instrument? Because, you know, there have been and are at times very tight correlations with the yen and metals or the yen and interest rates. Do you pay attention to that at all?
Yeah, I do look at correlations. I mean, I think you're just limiting yourself if you just look at a chart on its own. I look at a bigger picture. I mean, what I explain is probably like half of what I look at. I look at a lot of other things at the same time, like fundamental views as well. Like I said before, I mean, I'm no good at fundamentals, so I go to people that are and get their views on it. So yeah, I mean, I look at, you know, it's like, for example, the dollar yen and the S&P correlation.
Okay.
So I think it's probably plays catch up now.
Okay, so risk on would be your assumption at least until we achieve that target
Yeah,
in
that's
equities, right?
yep, that's what I'm looking for. So I think this,
Okay.
out of all the pairs, I think this should start moving. What I'm expecting. So yeah, that's one of my favorite pairs to go with.
Okay. I don't know what you wanted to talk about, but last week was a pretty significant week in the dollar. That perhaps that was at least a high, maybe the high, depending upon follow through. You have a view there?
Do you know what? I was very bearish dollar for weeks, and I've just been getting chopped up in there. But I mean, I'm not convinced. I mean, looking at the bigger picture, right? I mean, just look at the quarterly. I'm not convinced that we've got a top in just here. Maybe a short-term pullback, but it's just been a grind, hasn't it? I mean, looking at the weekly and stuff, it's just been a grind. I think it pushes towards the range high, about 100, I reckon.
Okay.
But for me, what would confirm it is if we break this low here, I think then for now it's just yeah, around there.
Okay.
So for me, it's just resistance turned to support right now. So I'm seeing last week as a pullback. I think euro is giving me more clarity of the dollar index. So I'm going to go into euro now.
Okay.
So looking at the euro quarterly, okay. So if we look, we had this massive range here, and we broke out of it. And I wanted that to hold. I think last time I was very bullish, the euro. But the moment it got back below it, that's what was saying to me that this was just a deviation. And I personally think, just based on this chart alone, I think we push lower. And the guys I've been speaking to, they're saying fundamental views lower as well. So I think into there, lower into about 1.05, 1.04-ish.
Enough to trade it from here or wait for a rally to do so?
No, I think yes, last week was the rally we were looking for. So even though I've been squeezed out, I've got a clear plan for it anyway. So my plan is I've got a bit of a mess here. So I think this consolidation, this range is key for me here. So I mean, if we were to look at just pure SR point of view, okay, this is just support turn resistance for now. Now clean break above, then I may have to reconsider and say maybe this could become a deviation, and if we cleanly break above it, then push higher. Careful, we got ECB this week, so anything can happen.
That's true. Yeah.
So but short term, I mean, I'm just looking for short-term opportunities for now, and my short-term opportunity, what I'm looking for, going back to the lower time frame, so we've established is that resistance and we had a rejection, okay, but is that enough? I don't know. But I'm looking at this. Now, this is the mean. So I've got the range high there, range low there, and the mean. So we had a deviation above it. And then when we got back below it, it's just been dropping. Now, is this just going to be a pullback into it? So what I'm looking for now is, I don't have confirmation yet. I shorted it this morning with a stop loss there. Maybe my stops are a bit too tight. So I'm waiting now and seeing, okay, as long as we stay below the range high, I believe any rally is a sell. Now, what would confirm the idea? Well, for me, I don't know how deep the rally is going to be, but what I do know is if it breaks below here, then I believe it's breakout of consolidation, and then at that point, it takes us back below the weekly open. And for here, this is going to be critical for me around the 1.1, 1.095 level. But this can be a short-term day trade target for me. If we get below that, then I think we're on for these lows, and then all the way back down to probably fill this gap in. Wouldn't be surprised. So this is going to be a target 1.0874, and going by the quarterly charts, the 1.05 level. So I'm still bearish this, but if this gets taken, smash above that, then I think we're on for much higher
Yeah,
price.
so the Macron election gap could be a target.
Yeah, I mean, I'm not too bothered about getting to the extreme target, but high probability targets for me would be here, and then further downside would be there, and then just pick out each low at a time
Okay,
for targets.
nice look.
So yeah, that's one of my main plays. I'm looking at gold as well.
Good.
Now gold, macro view, bigger picture, I am very bullish this, but I think we're due for a pullback in this. Now it's at a critical point for me. So again, last week we had a drop, and then towards the end we had a rally. I think we're probably soon topping out here. So what I'm looking for is a move below. I think this consolidation, above this consolidation, probably bullish, but below it, we're bearish. So I'm being conservative here. If you can break these lows here, I'll be looking
Around
for
1500. Yeah.
about 1505, clean smash
Okay.
below here.
Okay.
I think I'm looking for a short there into these lows here, and then there. But
There's
yeah,
support all the way down for hundreds of dollars, isn't there?
this is where I'd like to start looking for longs around the 1440s. Around
Okay.
here. So
Okay.
yeah, let's see. I think we could have a short-term double top in, but a clean break above here, then I think we continue the massive uptrend. Not
Where's
only
the-
that, well,
we
this
got
is the
through
thing.
that high.
I mean, looking at a big picture,
New
my
highs?
I would say I don't know about new highs, but probably around about here, I'd say.
Okay, 1630-ish.
Yeah, 1620, 1630s. Yeah, I reckon we're on for those targets. But I think more than that, I'd like silver. Silver looks like the better play to me. Once you can do the pullback. So looking at silver chart, I mean, we've just broken out massively. So any pullback for me into these highs, I mean, let's compare them both together. I mean, gold has reached the objective here, but silver looks like exactly the same thing happening, but it hasn't. It's just obviously warming up. Obviously, you had 1, 2, 3 months of up move, so obviously we can have some sort of pullback. How deep is the pullback going to be? Who knows? But in that case, what I do is, if I don't know, I'll just mark out the monthly open, let it do its pullback. I know that's a key SR. Do I know if it's going to hold? That's a key SR. I don't know where it's going to come down into, but I'll let it do its thing. As soon as it can then get back above it, then I think the low is in for the month, and then we head higher. I mean, I'm looking for.
Do you trade the gold silver ratio?
I look at it. I look at the gold silver ratio, so we can
Okay.
quickly have a gander there.
Because that really fell apart.
I mean, it's having a pullback for now. So obviously,
Hell, that's a monthly.
that's actually a quarterly. We'll go
Okay.
to it's the weekly I'm interested in. Just
Yeah.
to clear a picture. So I think this is just a pullback happening now. So what I'll be looking for is here. This can be my critical level now. So if this is indeed a deviation, okay. So what I'll be looking for is if silver can get to the SR level I've mentioned, what I'll be looking for is for gold, silver to come into that. As long as we're below that high, I think a pullback into there. I think this goes down.
Yeah.
At least into here, and that would mean silver would probably be the better long if gold silver can come into there. That being if gold is still looking bullish at the time, silver is still looking bullish. So silver comes to the support level and gold looks like it's bottoming out, and we got gold silver here. I think silver at this point would be the better long.
Okay.
But a break above here, they're all in gold. So
yeah. Okay.
Yep.
So yeah. So basically, it looks like the ratio's topped, and it could correct now, and that correction could lead to, again, more reversion to the mean, because over 90, I don't think I've seen in my lifetime in the gold silver ratio. You have to go back a long, long, long time to when you were in Pampers or before you were born, buddy.
probably.
Yeah. Okay.
So is there any other pairs you want me to go through? I mean, I'm looking at cable. Now, I think cable's at a critical point.
Okay.
So, with cable, I'm looking at this old range I had while we were in this consolidation here. So they've got the range high there, range low there, mid-range there. Where we're at is critical right now. I mean, there's obviously resistance at 123.80 here, and we could push up probably into there. But it's this that's critical for me. So what I'm looking for in this play is, I've got my, I don't know, I mean, we've taken out last week's high, and we're trading right there right now. But for me, if cable can come back below, so we had this range here in cable. We've got the bigger range, but the smaller time frame range is this. I've got my eye on. So now, if we can get back under here, I think the cable's topped out. If we can do something like that, oops, daisy, and then like this, then I think we've got probably a top in. And well, I say top, it's still range bound till broken out either side, but I think back towards the open.
Any view on oil?
Oil, yes, I was going to get to oil. I'm very bullish oil. Well, I was very bearish and then I had to switch my biases. So we start off with the messy chart where I got my range set. So my range goes from this range low to that range high. And I did try to short this and I got lucky a couple of times playing it. But then every time it came to my key level, it's just sharp move. So all it's really be doing is ranging here.
Yeah, and we had that stop hunt last Monday to clean out the prior low, and even though it wasn't a reversal day, it kind of looked like it had a corrective look to it.
Yep. So I did a review earlier, and I was looking for longs on oil. Now after this sharp move down into this, but the key for me is holding above the mid range. So how many times, if we look historically, right, once it broke the mid range, respected it, sold off, deviated above it, came down, deviated above it, sold off, deviated above it, sold off. Then you got to ask yourself, how many times is it going to keep popping above this before it gives up? So I waited for the confirmation, and the confirmation came in the form of we got that high there. And within the ranges, we have smaller ranges. We've got one deviation there, and then deviation there. The fact that it did this move down and got back up, that was a big bullish case for me. And if you look, perfectly respected this and pushed up. So I bought some here. I've got a wider stop here, but I think we probably push into this level next.
61?
Well, short term 59.17, and then towards the range high, which comes in around 61.
Okay.
So yeah, so I think now any pullback is a buy. So for me, my risk would now be, I mean, if we can close above this, any pullback into here, I think the risk, as long as we hold above this low here, I'm looking for 59.20, 59.15 to 61.
Okay,
and then we'll see.
So my views. Yeah.
So if we make a clean breakout, that could push a lot higher. But I think seasonality-wise, October is a big sell-off month, I think, if I'm correct. So maybe if we can push towards there or there, once I get the technicals lined up, then I'll start looking for shorts again. So, for example, say if you look historically at patterns and oil, it looks to me something like this. So it ranged for ages. So what I'll be looking for is, let me get a clean chart out. Then you'll see exactly what I'm looking for. So what I'll be looking for is something like this. So if we compare the two patterns, and this is just a bigger version of that, and then we get the breakout. As soon as it can come back within the range,
yeah,
and that's my deviation. At that point, that would be in the sell. So I'm looking for the same thing again. There, do its thing. As soon as it gets back within the range, then I'll be looking for the sells under there. At that point, I think we wipe out these lows.
Okay, well, do you follow anything on the interest rate front with what's been happening with flight to the bonds and chasing yields? You follow the Bund or treasuries or a 10-year yield, anything like that?
I mean, I do follow the treasuries every now and again, but personally, I just let other people do that work for me.
Okay.
I'm not expert at it, so there's no point pretending I'm good at something when I'm not.
Yeah, I mean, look, you know what? It only takes one market. Do you believe that sometimes? That I mean, people follow 20 things, but if you really master one, do you teach that at all? That people just lose their focus following too many instruments?
I mean, just taking my personal example, I can't follow too much because if I do, I make mistakes. So, for example, I'll give you an example. Like this morning, I mean, I was long euro. I mean, short euro, and then it made me close my dollar yen position. And I'm thinking, what the sorry.
That's all right.
I was thinking, well, why did I close that? Because nothing's changed with the dollar yen. Yeah. So I got back in. I waited for a bit more confirmation. I got back in the dollar yen. But this is what happens when I'm in a trade. I only usually enter another trade once my initial trade, I've reduced my risk. Now I broke my rule and got into two. Normally I don't. Now that's just me.
Okay, that's interesting. No, it's not only you. It's me. Me too. Anyway, so I was curious about that. Maybe we could wrap it with stock indexes. You've really, I've seen some great calls for you on S&P's. New highs in the cards here.
Yeah, I mean, SPX probably been my best market here, and it's a market I rarely ever trade. Well, I used to rarely ever trade till this year. So I was looking for massive downside on this, but what put me off is this is where the ranges helped me so much, where I identify, okay, whatever, like I said before, bigger time frame, small time frame, you're always in some sort of range unless you're at all-time high. Now, once this drop happened, we had a range low, range high, and mid-range. Now, for me, what would have confirmed this? Below the mid-range, I'm looking for shorts, okay? But that's just part of it. When it gets to the mid-range, what do I need to see? There was no breakdown here, no short here. Again, it came down here. Now, at this point, it went above, below, a lot of indecision. As soon as he was able to make a clear displacement above it, that was game over for shorts. And at this point, I thought, you know what, forget it, it's longs. So for me, it looks to me new highs.
Okay.
And that further supports my Dalian idea. So I've actually got into DAX long. I couldn't find anything for the SPX, but there's a DAX long. And looking at DAX, I mean, we've got this key SR level here, key pivot. So you can see, just highlight it like this. We've broken above it. I think we're on for short term these highs, but I think DAX probably comes into here. I reckon DAX is probably coming into there. So I've got a long on. As long as we stay above this low here, I think we're on for higher prices in DAX. So
No,
yeah.
okay, so no sign of a top. You'll reassess up there when it starts to do something wrong.
Well, if we, for example, say, because this is a key pivot, okay, if we break below here cleanly and stay below here, then I think all I can do for now is play level to level. So back into this here, so fill this gap in and probably into there. If we get back below here though, if we get back below this level here, then I think we're on for probably new lows. I say new lows, just back into probably
what happened in this summer. I have a question from one of our attendees on your yen analysis. He sees a gap in UJ up around 111. Do you have anything up there that could be that kind of a possibility up around 111, or that's too long term?
So okay, so whatever I'm doing the lower time frame, I can do the same thing. So let me mark our range. So if I believe if we can get above 108.80s cleanly, that opens the gates for, so for example, say if I'm drawing out my range, okay, and we're doing the lower time.
He's looking at.
So this is
that big gap over there. Go up.
Yeah.
So, all right.
Yeah, here's the gap he's talking about.
Yeah.
So this is my midpoint pivotal level. Okay, so if we get back above here, I think we've done the trading below here, and then that opens the gates for this half. So that's the bigger range. So we enter above mid range of the bigger swing, like this. So if we get back above that, then I think we're probably on for this level here, the 105.50s, and then that opens the gates for this into these highs here. Then. So yeah, that would cover the gap, but only if we get cleanly above here.
Okay.
We'll have to wait.
One step at a time. Don't get ahead of yourself. Do the right thing today, and tomorrow takes care of itself, huh, bro?
That's it. That's it.
Yeah. So, what another round of great looks from Saeed Zaman. What's the best way for people to keep in touch with what you're thinking, what you're doing? Is it Twitter? Or you have another place you want to show your? You have a room that you work with people?
I've got my Twitter's probably the main one, Trader1AZ, and I've got a website, traderz.com, so you can just check out what I do there. But yeah, mainly Twitter.
I always enjoy talking to you, buddy.
Thank you for having me on, Dale.
You know, you're part of my intelligence gathering, and it's great to have you and for me to be able to ask you questions. And you helped me today. I'm sure you helped others, and I want to thank you for edifying face again.
Well, we'll have to delete it if Dalian drops.
Okay. All right. Well, good hunting, bro. And, we'll get something on the schedule for you to come back. And you've pinch hit for me before. So you're almost like a regular, you know?
Yeah.
In fact, you are. You're a regular, Saeed.
Thank you very much.
You're a regular, great teacher, analyst, and trader, in my opinion. I respect you.
I appreciate that. Thank you very much, Dale.
Okay, everyone. That's a wrap for us here today. So don't just count your pips, count your blessings, and we'll see everyone for Turnaround Tuesday. Thank you again, Saeed. Adios, everyone.